Have you noticed something strange happening in the stock market? On one hand, investors can't stop talking about SpaceX. The company's blockbuster IPO created a wave of excitement across Wall Street. Millions of investors rushed in, hoping to catch the next big growth story. But on the other hand, the broader stock market is quietly sending warning signals. And that raises a critical question. Is Wall Street celebrating a new boom, or ignoring the early signs of a coming bear market? Let's break it down. When SpaceX went public, investor excitement exploded. People weren't just buying a stock, they were buying a vision of the future. Space travel, Starlink, artificial intelligence, and Elon Musk's ambitious vision captured investors' imagination. Many feared they would miss the next trillion-dollar opportunity. But that's where a potential problem begins. History shows that when investors become obsessed with a small group of companies, risks often build beneath the surface. And that's exactly what some analysts are worried about today. The US stock market has become heavily dependent on a handful of technology giants. If those companies stumble, the entire market could feel the impact. Meanwhile, warning signs are already appearing. Inflation remains stubbornly high, energy prices are rising, consumers are feeling pressure from higher living costs, and bond yields continue to climb. Then there's the Federal Reserve. Earlier this year, investors expected interest rate cuts. Now many experts believe rates could stay higher for longer. Higher interest rates tend to put pressure on expensive growth stocks. That brings us back to SpaceX. Some analysts believe investors may be pricing in a near-perfect future for the company, but perfection rarely exists in the real world. Recently, after the IPO excitement cooled, SpaceX shares experienced some profit-taking. That's not necessarily bad news, but it reminds investors that even the hottest stocks are not immune to reality. So, has a bear market already begun? Not necessarily. The economy is still growing, and many companies continue to report strong earnings. However, valuations are high, expectations are enormous, and investor confidence remains extremely strong. History shows that when expectations become too high, even small disappointments can cause major market reactions. The biggest risk isn't that SpaceX is a bad company. The biggest risk is that investors become so focused on opportunity that they ignore the warning signs around them. Because bear markets rarely begin when everyone is afraid. They often begin when everyone believes the good times will never end. And Wall Street may be closer to that mindset than many investors realize. So the real question isn't whether SpaceX is an incredible company. The real question is whether the market has already priced in a perfect future. Because when perfection is expected, even a small disappointment can have a very big impact. And that's something every investor should be thinking about right now. The biggest investment mistake isn't buying a bad company, it's paying too much for a great company. A company can be innovative, profitable, and have an exciting future, yet still become a poor investment if investors expect perfection. Markets don't just reward good businesses, they reward businesses that perform better than expectations. When everyone believes a stock can only go up, risk often becomes invisible. High valuations, excessive optimism, and unrealistic expectations leave little room for disappointment. Even a small setback can trigger a large decline, because the market has already priced in the best possible outcome. That's why successful investors focus not only on the quality of a company but also on the expectations built into its stock price. Great investing isn't about chasing excitement, it's about understanding the difference between a great business and a great investment.